welcome. You're watching Business Today TV. I'm Sakshi Patrawal. This is a special edition where all our focus is going to be on the glittering gold. Gold prices have again hit a lifetime high. When we talk about the MCX levels, we've finally seen the level of 69,487 rupees per 10 grams of gold to be seen on the gold futures on MCX, and this is a lifetime high. Where exactly is gold headed? Because this is now nearing the 70,000 rupee per 10 gram mark as well. And what should be your strategy? What should you do with your investments planned in gold? And where are the prices headed? All of your questions will be answered in this video. Joining in with me on this show is Mr. Navneet Damani, and you've watched him on this show multiple times. He's the head of commodity research at Motilal Oswal Financial Services. Navneet ji, welcome to Business Today Television. What is happening with gold? There is no stopping the kind of all-time high levels that we are seeing, and now we're just like there's a gasp of breath when we see 70,000 approaching on the gold prices. Tell us, what is the reason behind this all-time high levels and constant surge?
Hey, Sakshi, thank you for having me on the show. Well, gold prices have given about 8% returns in the last 3 months, and that is preceded by 15% returns in the last quarter of 2023. So, in totality, in the last 6 months, we've seen about 20 to 23% kind of returns in gold. And this is not something which is very normal, and it has to be backed by some events and geopolitical tensions, central bank buying, and so on and so forth. For the last few months, what we've been witnessing is that geopolitical tensions are kind of cropping up and then abating, cropping up and then abating, and that's been the rhythm as far as geopolitics are concerned. A dollar and index has been pretty stable and steady around 104, 105 mark, which is also adding to some exuberance to gold. To top it up, you have central banks talking about a possibility of June rate cuts and delivering three rate cuts in this year, 2023. So that is also adding to some fuel to some fire in terms of gold prices. And technically, we've seen some short covering and exuberance happening in the last, say, probably $100, $150 movement, or which is taking everybody by surprise. So as of now, had this move come in the last quarter of 23, 24, maybe $2,300, we would have been comfortable. But the sudden move has taken most of the participants by surprise.
Okay, 22% move in the last 6 months as far as gold prices are concerned. The key factors you've understood: geopolitical tensions, now rate cut hopes coming in, and therefore prices could perhaps continue to be on the up move. Where exactly do you see gold prices headed in FY25, sir? Now 70,000, I'm sure, could be a reality any time that we see, because now we've already seen 69,500 already achieved on the MCX futures. But for the entire fiscal year, we have just started off FY25 on an all-time high note for gold. How do we see the prices going forward?
Well, I would call this last move as a bit of exuberance, and probably, as I mentioned, that it's been a surprise for most of the participants. The move from 62,000 to 69,000 has taken everybody by surprise. And let us understand that commodities by nature are self-correcting in mechanism. So once these kind of levels are probably stable in the market, you will see a lot of second-hand sale happening in the physical front, which could increase the supply in the physical market. And there is a bit of buyer apprehension. Physical demand at this point is very, very shallow, because somebody will not be comfortable buying gold at 70 lakhs per kg. What we saw about 60 to 63 lakhs 3 months back. So it will take its own sweet time for the buyers to probably get into that rhythm that prices are here and are going to stay here. Until that time, physical demand could be shallow. Plus, you could have second-hand inventory coming to the market, which could kind of push up the inventory levels in the market and could be detrimental for gold prices. So significant gains from here could be a little challenging unless you see a rise in geopolitical stress and massive buying from central banks. But otherwise, I think market has played it and a little too fast than anticipation. So a bit of cool off or consolidation is likely probably for the next 3 to 6 months.
Okay, I guess demand is dampened, and that can be easily seen with these kind of levels approaching 70,000 per 10 grams and 70 lakh for 1 kilogram of gold. That's the kind of prices that we are seeing right now. But will investors get a cool off period to invest? Say, for example, if somebody had already planned their investments for the new fiscal year, that they are going to be setting aside some money to invest in gold, what is the strategy that you will tell them? Are they going to see any depressions and any dips, and what would be the right level to get into gold?
Well, definitely it calls for some bit of correction. Maybe it could be a time-wise correction, it could be a price-wise correction. We have to wait and watch because the current underlying tone is very different than how gold generally behaves as a market. And I've been very vocal about my stance in gold and silver for the last few quarters on your show as well. So I
Yeah.
think the target that we were anticipating in the last quarter of 24 has come in the first quarter of 24. So we would be little cautious and would wait for price to probably stabilize or correct a bit. A better entry point could be about $2,100 or maybe below 65,000 levels from a risk reward perspective. But if you ask me, somebody wants to put his money now, maybe he could wait and watch before a reasonable correction because from here on, if you compare with a bank FD, which gives you about 7.5% returns, that kind of returns is not something that I'm seeing in gold for the next 6 to 12 months.
Okay, so in case you are thinking of investing in gold, this is not the right time. Wait up. There could be depressions, some cool off period after this sudden exuberance that we have seen, and around 65,000 odd levels is where you should look at investing afresh in gold, because Mr. Damani clearly says that in case you are looking comparatively to a fixed deposit return of about 7 odd percent, that's something he's not expecting over the next 6 to 12 months, because already we've seen a sharp run up in the previous few months as well. You were also talking about silver. You've always maintained on our channel as well that silver is likely to outperform going forward. So if somebody is purely looking at an investment point of view and not from a consumption point of view, it is silver that you will tell them to invest their money in. How is silver moving? Is that also moving to record high levels along with gold? What is the expectation right there, and what would your strategy advice be?
Well, silver has been a dampener vis-a-vis gold. Gold is giving you about 22% return, whereas silver is giving you about 7-8% returns only over the last 6 to 12 months. So I think
Okay.
compared to gold, it has not been as great as what the move has been for silver. But that comes on the back of poor demand from China and probably the industrial material complex being largely under pressure because of not so great demand across the globe. But however, in the last 3 months, we've seen a bit of positivity coming in. Chinese PMI numbers are better than expected. Their industrial numbers are better than expected. The import numbers coming from most of these metals from China are largely to pre-COVID levels, which gives me a sense and comfort that maybe as we approach the second or third quarter of 24, Chinese demand is going to be back and with a bang. So if that's the case, you will see industrial metal prices also flying, and that could be taking silver along from here. So maybe one quarter of consolidation for silver, but I'm pretty comfortable buying silver around these levels also with a fresh upside targets toward 82,000 and 85,000 levels also.
Okay, fresh upside can be seen on silver. 82,000 to 85,000 kind of levels is where you can actually see silver headed for per kilogram kind of levels. So this is the time when you can actually see now outperformance continuing, even though it has underperformed gold prices over the last 6 to 12 odd months. The kind of returns that you can expect is higher in silver going forward from here. So that's expected as far as. So key factors that you'll be looking out for when it comes to gold and silver prices. You did mention geopolitical tensions and you did mention rate cuts as well. Anything else that investors looking at commodity investment should be looking at?
Well, central bank buying is one of the bigger factors that have been playing very strongly over the last 2 years. Maybe in
Yeah.
22, 23, we've seen more than 1,000 tons of buying by central banks. And this last quarter number is expected to be very, very huge. And once this number comes in, maybe some bit of thrust or positivity can enhance for gold prices. So that is one of the factors. Any escalation in geopolitical tension or probably Fed going in from a three rate cut trajectory to a more faster pace, that could be one of the things which could drive gold prices further. But I think most of the points have played out at the current juncture and current price. So you will need some more thrust and more impetus for prices to rise from here on.
Okay, well, fair enough. Thank you so much, Mr. Zamani, for being with us on the show and sharing with us all those wonderful ideas and insights about gold and silver and where are the prices headed for these precious metals and what should be investor strategy as well. But day one of FY25, and we've actually seen gold prices hit it out of the boundary, but there could be some correction in the offing, and that could bring in some breathing space for all the investors who've been looking at buying gold at lower levels than what they are currently at. Many thanks for being with us on the show. All right, we wrap up this special conversation right here, but do stay tuned as we continue to bring you all the action on the other side.
In the outskirts of Bengaluru lies a seat that will see an intense battle. It's DK Suresh versus CN Manjunath in Bangalore Rural.